What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and it's New Year's Eve, baby. The champagne is chilled. Retail is already posting P&L screenshots on Twitter. And Wall Street is buying more insurance. That has been the theme of the week. Can we agree on that, everybody? Can we just agree that the theme of the week has been insurance, This was, we're going to go ahead and break down. This is our FlowScanner show. You're familiar. This is from Investor Central Club. And this is going to show you exactly how big money positioned into the close of 2025. And spoiler alert, this was not a YOLO tape. This was not a risk-on euphoria pipe dream. This was a we don't trust January tape. Let's go ahead and dive right into it. Now, why does options flow matter exactly? Before we start dunking on the market, quick reminder, price tells you what already happened. Options tell you what professionals are prepping for. Institutions don't tweet, they don't post rockets, and they don't care about vibes. They hedge before volatility shows up. And on New Year's Eve, when liquidity is thin, when retail volume disappears, options flow is louder than usual. Now, let's talk about our feral lady SPY. Our feral lady SPY here. So, if we look into SPY, If we look into SPY, we had about 75 million put into total contracts for volume today, right? Now, 3.97 million of that was in calls against 71.2 million in puts. If we look at our hottest contract of the day, we saw that the 654s due for January 16th of 2026 are the most popular. And, well, it's not a typo. This isn't fear. And that's what you call insurance, all right? Think about the setup. CPI, it's still sticky. The rate cuts are most likely going to be held up going into January. January rebalancing is coming and hard. Earnings season is right around the corner. Funds aren't betting on a crash tonight necessarily. They're saying, if January gets weird, we're not explaining this to the risk committee. The key takeaway, SPY puts are going into mid-year end. This is volatility prepped, not bearish conviction. So note, not time to panic and jump out of the airplane just yet. Now, next up, we have QQQ, which we saw a total premium of about 23.36 million, with 8 million going into calls against 14 million in puts. Now, our most popular contract here were the 620 puts due for January 16th of 2026. Puts greater than calls. This is the most important nuance on the tape. Institutions want tech exposure. They just don't trust crowded AI trades, stretched multiples, and January positioning resets. So what do they do exactly? They hedge the upside they already own. This is classic. We like the trend, we don't trust the timing. That's not bearish, but it's definitely not FOMO either. Now, another one we have is SLV. SLV came in at, we had some late prints come in here, folks. We had Google up next. They had about 16.6 million in total flow today, with 2.72 million in calls against 13.92 million in puts. Now, our most common contract was a call of 182K for the 310 puts due 1/16 of 2026. But if we look at just overall Google flow as a whole, we're going to go ahead and see that we saw some big money prints here, 325 and 310. These are both very close. So this is 310 could be looked at as where support could be seen. 325 up here in calls. So looks like they're straddling this, and they're looking that Google does still have some upside, but they aren't necessarily married to it because they have that support at 310 and 325. That is pretty much how we're looking at Google. Now, Tesla is our next ticker up. We had 14.17 million in total flow, 4 million in calls against 9 million in puts. If we look at this, we're seeing that calls at 455 dominated. Now, if we look at our overall Tesla flow, we're going to go ahead and see that 350 puts due for about a year from now, a year and a half, 18 months, 350s. Now, this is most likely insurance, and we have calls for February 20th of 2026, the 455s. Very close in the money. This could be a hedge, but again, we're seeing overall bearishness, but this is mainly from that $8 million print that we saw. SLV is up next. With SLV, we saw 12 million in flow, 7.04 million total in calls against 5 million inputs. Now, this was a tricky day. We see a lot of put flow that came out throughout the day. A lot of put flow coming through in the day. Honestly, that was our most common contract. These $60 puts, right? They were getting hit on the tape. 26 hits, folks. 26 hits on these. Now, if we look at overall SLV flow, we're seeing that we had a $2 million call option bought for the $80 strike due for June 18th of 2026. Now, if we're looking at the overall flow, up here we can see the put to call ratio is about 38.25K to 52,000. On premiums, we're looking at 11 million against 7 million in the total overall market. Now, I would look at this as silver needs to cool off for a little bit. If we look at anything unusual as well, we can see that someone bought $79 calls for February 6th of 2026 as well. Again, this was a sweep. That means it's JG Wentworth, baby. It's their money and they want it now. And that's how they're going to look at it. So that's what's going on with SLV. Overall bullish. We had a little bit of a sell-off today, but I could see us recovering here soon. Finally, our last tick. Well, no, we'll do IWM too. NVIDIA, we saw 10 million in total flow today. 6 million went into calls against 3 million in puts. We can't even find it. Oh, wait, we can find it. I need to turn off unusual. 182.50s were the most common contract. This was definitely a delta hedge. These are very much in the money. This is just buying upside exposure without marrying it. If we look at overall NVIDIA flow, though, we can see that from a premium perspective, 190 to 192 were these support levels that they're buying at. 3:47 p.m. would be our latest. No, we got a good amount of calls coming in. I would say a lot of the support is either long-term insurance against a bigger position, or where you could look at it as where dealers are going to find support for that. So NVIDIA overall bullish today. They did buy that $5 billion stake into Intel as well. So it'll be interesting what they do with that, because they stopped testing Intel's A18 chips. And that's why we saw that little sell-off on Intel. Now with IWM, we saw 7.6 million in total overall, with 1 million in calls against 5 million in puts. Our most hit contract were the 241 puts. These were most likely institutions continuing to build into a position, because we're seeing that volume is significantly lower than the open interest on these right now. So that means we can expect price to potentially go here because that open interest is still here. Now, if we ever see this drop below 23K, we can assume that dealers are starting to exit, and that maybe it's time to, well, get in line, right? That's pretty much what we're seeing. Now, with overall flow on IWM, our biggest contract of the day were those 236s, 2.52 million, only 0.70. That was 36,000 in volume against 67,000 in open interest. Now, Again, why is this happening? Most likely because the fact that IWM benefits the most from getting rate cuts. Because they may not get those rate cuts, it may not be pretty time for them. But it is what it is, all right? So let's go ahead and zoom out. Wall Street, it's hedged into 2026. Hedged the index, rotated into metals, maintained selective tech exposure, and avoided small caps. This is risk management, it's not fear. The options market is not pricing a melt up, it's pricing price movement. Well, that's the difference between retail and institutions. Retail reacts, institutions prepares. So if you're trading January like it's December, you're late. This is a market that's not for the drunk, it's cautious. And the options tape proved it before price moved an inch. That's why we use FlowScanner from Investor Central Club. Real-time institutional positioning, premium weighted signals, and context price alone can't give you. If you want to see where big money is hedging, where it's rotating, and where it's quietly building exposure, use the link below, try the platform, follow the money, and stop guessing. I'll see you guys in 2026. Happy New Year and trade safe.